Okay, folks, welcome to Market Wrap. It is Thursday, February the 11th, 2010. Um, Folks, the Dow Jones Industrial Average was able to put in triple-digit gains today with a 1.5% gain. Uh, don't get too excited, and I'll tell you why. Is this a nice bullish move here? Sure it is, but we have not yet broken above this downtrend line. Furthermore, what you see here is up volume declining. Remember, it's not about the individual move. It's about all these moves here since this bottoming tail occurred, and what is the conviction on the part of buyers. And as you can see each day, the conviction on the part of buyers has dissipated. And what was the cause of today's action was the fact that there's no plan as of yet, but there's a proposal, a promise from the European Union that they're going to bail out Greece due to their extremely high exposure. I believe it's Germany and France alone. Societe Generale out of France. They have close to $1 trillion, not just that one company, the bank, but France and Germany locked up in Greece alone. So you can just imagine the havoc that would wreak on the banks in the euro zone. So if Greece were allowed to default, it would be the second banking crisis in Europe. It would start in Europe and then possibly spread over here, because Lord knows what type of exposure we have to those banks that could possibly go under. So it's a domino effect. And again, it's not just Greece. It's a euro story. I mentioned that the other night. You know, Greece has a smaller economy than California does, but there's a domino effect that it could occur. So let's just keep that in mind on what we're dealing with. The rally occurred today on relief, and you had a lot of short covering. Why? Let's take a look at the euro. The euro, which has been an absolute wreck these past couple of months, saw, here's your double bottom. Bottom one rallied higher. Double bottom two came back down, retested, reversed, and held. Now, on a longer term basis, you have the 50-day moving average, which crossed over the 200-day moving average. I mentioned this recently as a reason why I'm bearish on the banks. You have this setup occurring on Goldman Sachs and J.P. Morgan. And as you have a declining 50-day moving average, it acts as a declining ceiling, basically a downtrend line that acts like a brick wall for the index or the stock to try to break above and then to rally. You need volume for that to occur. So there's a lot of damage been done here. So you have a lot of overhead supply. People that were long the euro, they're looking to get out. It's the same thing for stocks. So is the euro in an oversold territory? Yes, absolutely. Is it ripe for a rally? Yes, absolutely. Was the dollar somewhat oversold? Overbought? Yes, it was. And the dollar is in the beginning of a longer term uptrend, as the euro dollar is not necessarily at the beginning, it's on its way to a longer term downtrend. So is this over by any means? No, I don't believe it is. And the tail of the tape here is take a look at volume. We'll go back to the Dow Jones Industrial Average. Yes, it closed above the 10,000 level, extremely important psychological level. So let's get over to U.S. Steel. I sent out an alert midday that if U.S. Steel were able to make a new intraday high, that we will close out the position and take profits. That's what we did. So we were out of U.S. Steel, and I see it closed up a little over, close to 6%. We were out at about the 4% range. I wasn't willing to stick around and watch this thing rally away from me. I have too much respect for the volatility of U.S. Steel. So what did we have here that made me worried? You have this bottoming tail here, and you have this uptrend line that's starting to fall, very, very short term. On a longer term basis, and I mentioned earlier in the day that volume was on the way up. We had up volume intraday, and that those who listen to me, those who read my writing, you understand that I respect volume dearly. I saw it midday. I didn't want to fight the tape. Why bother? It doesn't make any sense. Let's take our profits, get out, If it rallies higher on declining up volume, we'll use that as our opportunity to get in. So that's a story with U.S. Steel. Is U.S. Steel rallying right now on steel demand? No, absolutely not. And how do I know that? Take a look. The Baltic Dry Sea Index. Yesterday it was down for the week 3%, a little over 3%. Today it's down 5% on the week. This is still going down. Global demand for commodities is dissipating. So the demand for U.S. steel is not there. It's an oversold trade. This is short covering rally. And speculation on the weaker U.S. dollar helping steel prices, and therefore they rally U.S. steel. As soon as the dollar comes back down, and here's the UUP, U.S. dollar index, you see these topping tails here. As soon as we get a pullback, perhaps to the 2330 level, and then a consolidation, perhaps a rally higher, then you're going to see U.S. steel pull back once again and probably break below that 200-day moving average. Do we want to be short then? Absolutely. We'll look to get back into it. So we took profits in U.S. steel. Also, we took profits in Corrections Corp. We had a 6% profit in 2 days. You know, that's nothing to sneeze at. You annualize that, that's a heck of a return. So I decided midday, you know what, let's take some profits off the table. I was concerned about a late day sell-off in the market, so we took them off the table. Nobody ever went broke taking the profit. Now, for those who are interested in getting long of Corrections Corp on a longer-term basis, you want to hold this stock, now is the time to start watching as it perhaps continues higher. I would be a bit surprised if it does. It will eventually stall and come back down and attempt to retest the 1749 level. If it holds here, that's when you want to begin to start adding to your long-term position. Perhaps we'll do it. It depends. I'll do some research on the company, and if I like it, then perhaps I'll add it to my longer-term portfolio, and I'll let you know. But right now, the reason why we entered this trade, we always need to remember our reasoning for entering a trade. Our reasoning here is that we had an extreme, here's our RSI, an extreme oversold condition. We wanted to take advantage of it. We knew where our support level was. We knew there was a possibility that the market was going to rally. So we wanted to get a little bit of exposure to the long side since we had such big short positions. So we decided, let's get long of Corrections Corp. And sure enough, it worked out in our favor. Congrats to, I know there were a number of you that participated in the trade. Congratulations, and enjoy those profits. Put them in your pocket and look for another trade. YRCW, I mentioned this the other day. We're looking for a pullback, and it happened today. The low of the day was 62 cents per share. What was the previous low? 62 cents per share. All right, so we exactly hit it today. Now, can it hold here? You know, there was higher volume here. I have to say that's concerning. We had a bottoming tail the day before. It didn't hold today. It held support, but there were no buyers that came in to bid it back up. I would have liked to have seen that. So am I concerned about that? Yes. But we don't have a huge position in this. It's not a major play. It's a speculative play. It's for fun for the most part because we know how speculative it is. So we'll watch it, hope it holds, and we'll see if we can make some money on it. That's it for tonight, folks. I'm pretty tired, and I'm going to get to do a little bit more research. And if you have any questions, please shoot me an email, and I'll be more than happy to get back to you, okay? And I'll talk to you soon. Bye-bye.